Um, Gmail. From what I saw, I can't remember the numbers, but I think I wanted to go over it with you. Let's see, Parsons. It's a 10 unit.
Yeah, it's funny. Like, I think in the exercise, I was like, just look at like 10 properties and analyze them, and then at the end, like, what's the result?
Mm-hmm.
It's so discouraging when like literally the offer price is like 75 to 50% of what they want, and
Yeah.
you know that when you send the offer, they're just gonna like laugh at you. But this is what I mean by, a lot of the brokers, they don't really set expectations with the buyers. They just
Mm-hmm.
want the listing and they'll just do whatever. But in reality, they're not going to sell that price unless you have a huge 1031 exchange and you just want to defer a bunch of taxes. In that case, you might buy overpriced. But other than that, like for people like me and you starting off, like we can't take those type of deals. So
Yeah.
it has to be like off market. So the whole point of that exercise was to make you realize that, number one, how to quickly underwrite deals. Number two, deals on LoopNet and deals brought to you by brokers off market as pocket listings. They're usually not good. So unfortunately, you have to go like, send direct mail, go direct to owner, or if you're lucky of a wholesaler, you might get a good deal. I haven't had one yet with a wholesaler.
Mm-hmm.
But I'm probably not networking as much as I probably should be with wholesalers, because a lot of them, it's just like, once you find one good one that finds good deals, it could be a good relationship, but it's just a numbers game at the end of the day. For the wholesaler, they're just trying to flip it like quick for money.
Yeah, just get their assignment. Yeah.
Like versus like me and like eventually you, like people go through the course, like, dude, the deals that I lock up, I for sure know they're good deals. I just am
Mm-hmm.
wholesaling it because either A, I don't want to partner, or B, it just doesn't make sense for me right now. Right. So
Mm-hmm.
that's what I'm saying. It's a different mentality where like I could easily wholesale any of my deals that I bought, my 26 and 20 unit. And my 26 unit, to be honest, I could have made $100,000 easy for a wholesale fee. And the buyer would have made 100,000 of equity day one too. So we could have split the
Mm-hmm.
equity that was there.
Mm-hmm.
So like, that's why I'm like thinking like, once my dust settles down and I start looking for deals again, I'm gonna like start wholesaling the deals that I wasn't interested in, because there are some deals that were maybe too big, or maybe it was just an area that maybe it was a little bit too like tertiary market for me.
Yeah.
Could have maybe like wholesaled those over, but I was just so focused on buying it. I didn't think about that model. But
The other exit strategies. Yeah.
hey, like I won't say no to a couple, 10, 20, 30, 40, $50,000 if it's easy effort. But the hard part is just finding serious buyers. Like a lot of people,
Or other wholesalers, like, yeah, that's
yeah,
gonna
they're
be
trying
the
to daisy
missing
chain, like they
daisy
daisy chain, and
chain. Yeah.
people. It's so annoying. Like I just being in the business for so long, because when I buy real estate, I'm serious. Like I
Mm-hmm.
usually will close. Like I'm
Mm-hmm.
very like, it's just me. Don't have to raise money, and I'm pretty serious. Like I'll tell the person straight up, like, hey, do due diligence. And I'm not gonna drag this thing on, right? Like I will know if I need more time. I'm gonna explain why I need more time,
Mm-hmm.
right? Like I said, hey, I need more due diligence. I'm waiting on some bids for my contractor to see how much repair is needed for these issues that we found, right? As long as you kind of explain that, like it's reasonable, like to ask for more time. But like some buyers that you work with, like my God, like you think they're serious, and then like even if they own like multiple properties, you think they're serious. So I kind of get how brokers can get jaded over time. To be honest, I would
Mm-hmm.
probably would be too. Like people aren't real serious, but you have to vet for like proof of funds, and like to me that speaks volumes. If you can show me proof of funds, like at that point, it has to be liquid funds. Like
Exactly. Not a letter of intent or like,
yeah,
something like that from online. Like I've had that come, I had deals that I'm trying to sell. And then after that, they provided. I'm like, come on, you got this from Jerry Norton or something like that online, whatever
yeah.
the case.
Or you can get like a letter from like a mentor that says, yeah, this person has money, but in reality they're
Mm-hmm.
gonna syndicate it, right? Or
Yeah.
something. So for me, I don't like that. Like I wish buyers would just be straight up like, hey, I like your deal, but I'm gonna have to raise the money.
Mm-hmm.
What they're trying to do is they're just trying to get under contract, and then once you're under contract, you're stuck with them a little bit.
Yeah.
So that's what people do. It's so annoying, and that's why I'm just like, I know if I become like a broker, I could probably dominate, but that's a different mentality, like selling
Mm-hmm.
real estate versus like owning it. It's a
Well, I
different.
mean, and you got to look at it this way, right? So obviously you want to buy it first, right? Buy
Yeah,
it first, and if not, wholesale it, and then maybe worst case, is you list it, right, as the third and final method,
that's
because
true.
yeah. So that would probably be the only way that I would get into it is if I can't do any of those two things.
Yeah, yeah. So sorry, I went a little sidetracked there. You have your deal?
Yes. Let me go ahead and see how I share my
Yeah.
screen. Um,
Have you been able to use the calculator? Okay.
yeah. Uh-huh.
Okay. Cool. Yeah, I made it like really simple. um, just really simple, just quick and dirty number crunching, and awesome.
All right. Avoid an inconvenience, don't share entire screen. Do you see it okay?
Yeah, this looks good.
Okay.
So this is
All
from a
right.
wholesaler.
Yeah, well, I think they're agents as well. Yeah, they're agents.
Oh, okay.
So this is some of the numbers on it.
Okay. Okay.
Let's see. Those are pictures, but these are the financials.
Let me see here. Looks like they use Rent Manager. That's what I use from all my properties. So that's good. What is that? That's a 12K about a little
Yeah,
bigger.
11.
There you go, 11K.
Yeah, 11K.
So they're getting around, looks like 1,000 on average,
Yeah.
roughly. Some 1,100. And these are all 2 bedroom, 1 baths.
Let's see what it is listed at.
They didn't. Guess they didn't list it.
Let me duplicate this.
Okay, at least it's 100% occupied. That's not bad. All right, there. 10
Yeah,
units.
2-1.
Yeah,
Yeah.
so they're all 2 bedroom, 1 bath turnkey. So I'm assuming those are renovated. If they say turnkey,
And it looks, let's see. It
mm,
looks the exterior, right? They just painted white and the gutters, but it doesn't look like the inside of the units have been
oh, that's not a
uh
turnkey.
yeah. Like the appliances. The floors don't look too bad. They painted the cabinets.
So that looks like,
Uh,
was that tile?
um,
It's a little dated, but
this might
okay.
be LVP. Um,
It's like LVP there. You got a kitchen vanity, got some paint. Honestly, this looks like my Oklahoma 26 unit apartment before I renovated it. So,
yeah. So they're using renovated very loosely. Like I said, HVAC units still in the original cage. But yeah, back to the numbers.
that's
So
straight up C class right there. That's
yeah,
C class apartments. So it looks like, let's see. Hey, can you Google can you just Google that address? Let's look on Street View.
hmm
Let me go to Street View right there. Curious to see. Let's go around the neighborhood. Yeah, that's pretty modern. I mean, they just they painted the outside white. We'll put some black around there. Looks like it's in a neighborhood with single family homes. It looks like.
hmm
Yeah, this looks exactly like this. Reminds me of my 26 and my 20 unit. Kind of
and
scary.
then see, yeah, there might be some more multifamily up the street. Let's see.
Okay. Yeah, it looks like a Holiday
There's a
Inn
church.
or church.
Church. Yeah. Okay.
Okay.
Yeah. So,
Okay, here's some more multis down here.
yeah. Some. And these are renovated. Yeah, I've actually driven past this neighborhood. Um,
Is this nearby where you live?
yeah, this is like 10 minutes. So it's like
Okay.
I'm in the city, but like there's little pockets in the area that's like there's renovated houses like this, and there's multifamily like this.
What's around that area? Is there any kind of like, I don't know, Chick-fil-A's or Whole Foods around that area or no?
Not in the general area, but you got to go like 5 to 10 minutes away. Like probably like 5 minutes away. There's a Chick-fil-A like on Northside Drive, like down the street.
You know why I asked that?
Uh, yeah. Uh-huh.
Yeah, that means the path of progress if it's like something nearby. So okay, is the area okay? Like, would you consider it like decent, or is it kind of sketch?
It's decent. It's decent. Like it's definitely gonna appreciate down the line. Like, let's see, where can I go on the map? Is this the street? Where's the map?
Yeah,
Okay,
you
yeah,
go.
wait.
Here you go.
So where is
Uh,
it at? So yeah, this is
it's
like
near the
the
stadium.
stadium.
Yeah.
So it's not too bad. Let's see. And I'm like, oh, you can't see my. This is my neighborhood right here,
Okay.
and
Oh,
there's
it's
like,
near an IKEA. The IKEA up there near some universities. Huh.
yeah, there's some college, Georgia. So it's like it's really weird, right? This is like very. I mean, you probably might have heard of Georgia Tech. Um,
Yeah.
and then there's like Emory's not too far, but like in this specific area, it is a little bit rougher in
Okay.
these parts right here. But as you can tell, it's pretty close to all the major stuff.
Yeah, you're near the stadium. That's where the Falcons play, and then
Uh-huh.
you're near some universities. You're near some hospitals. I think I saw. So what I'm kind of thinking out loud is potential for midterm rental or short-term rental if you want to get higher rents
Yeah,
and
yeah.
willing to put in the work for that. But you're probably gonna have to update, to make it real turnkey, not whatever that was. I mean, it does. I don't think it's gonna cost you more than probably 5 to 7K per unit to get it there, based on what I
But
saw.
my thought of process is though is like once people actually have to drive, to get to the Airbnb,
Uh,
like
it
it
might
might,
turn you away.
yeah, they might go ahead and just, it'll definitely take a toll on your reviews.
Yeah, that's true. You get like a 2-star review for.
For location.
Okay, that's fair. That's fair. But okay, so
But like over time, I definitely do see like the whole area is gonna be like it's gonna be like this, like where I'm at,
okay,
like um. So yeah, but that's the location. Um,
okay. How about so what county is that property in?
Fulton, Fulton County.
Yeah, so open a new tab and search fair market rent and enter that county name. And let's look up what Section 8 pays for a 2-bedroom, 1 bath. So click on the first one. Yeah, that one. Oh, you know the drill. Yeah, that one. And then click there. I actually showed this in my course, but you probably already knew it. So, it's kind of like a good like eyeball. From my experience, they kind of pay a little bit more. Oh wow! So they break it down by zip. Um,
Oh, is this 2 bedroom?
2 bedroom,
It's
so
two
it's
bedroom, two
middle.
bedroom right here.
So right there, what's that? 1,500. So I mean, there's
Room
some
to go up.
room to go up on the Section 8 tenants and all those tenants. So they're averaging around 1,000, right?
Yeah.
So I don't know if that 1,500 is actual turnkey. I mean, I think these units are not. I wouldn't consider them turnkey. I think they're decent. I think there's no like deferred maintenance. It's not hideous, but
Mm-hmm.
So safe would be like you either probably talk to a property manager, or maybe if but I would say safe to assume around like 1,250 ish,
Mm-hmm.
maybe. I don't know when the rents were raised or when they came into the property. Is that area? Oh, you can probably see on the rent roll. Like, did they show when the lease when those
Yeah.
leases started?
This is well, that is.
Usually they show you the move-in date. If not,
Let me see.
they might have.
No, this. Let's see,
No.
no.
Wait, go back to that rent roll. What was the Section 8 rent that they're paying? Go back to the rent roll. So look at that. It's like half, right? Like, no, wait, no,
Yeah. Oh, that's the portion.
that's
So
their portion.
it is it is a little. Let's see, what is that? 631 plus 494. So it's
Okay.
1100 for this top one right here. 1126.
Got it. Okay, so there's
Yeah.
some room to increase, like but you have to go through that paperwork of like, filling the paperwork to increase the rent. But what I love about Section 8 is like, it sounds terrible, but if you kind of raise the rents to market, like the tenant pays a portion of it, right? A lot of times they might 20% of it. So even if you raise it by like 400, their overall monthly payment might go up by like $80, which hopefully shouldn't, make or break them. And
Yeah.
that you can say that you are probably covering water on this, right? So when you work with Section 8, you say, I cover the water and trash. So they don't have that utility expense. So
I
that can.
think for this one, let me know if I'm reading it correctly. They're
Oh, it
paying
says
for water.
H2O.
Yeah, they're paying for water. Customers 100% charge.
Oh, I missed that. Yeah, so you're doing rubs then. So you're billing back water. I assume for 35, it's a one person living there, and then for 50, it might be like two or three.
Okay, yeah.
So you know how rubs works, right? It's master metered, so it's 1 meter, but bill back a flat rate based on like the unit size. So for example, a 1 bedroom might be like $50, a 2 bedroom might be 100.
Okay.
Or you can base it off how many people are in each unit. So if your unit has 2 people, you pay a little more. If your unit has 1 person, you pay a little bit less. So, okay, so this actually includes water already, which is nice. But just so you know, for Section 8, you can charge more if you say you cover certain utilities, but you have to specify.
Okay.
I know because I have 2 tenants on Section 8 right now. So like make sure you specify, hey, I'm paying water, I'm paying trash, and then they'll reimburse you that. They'll give them a little more money for the rent, for the voucher. So okay, so yeah, there's room to go up.
Yeah, it looks like the Section 8 tenants are paying 1126.
Yeah.
What everything, so
they're kind of on everyone's around 1100. So yeah, that's pretty good. I mean, that's a pretty good margin.
1161 plus the water fee. Yeah.
Yeah.
So
what type of cap is Atlanta? That area? What cap is that?
So that's one of the things I haven't been able to specifically dial in on. Like those 2 appraisal reports I saw were seeing about like 6.75, 6.25, I think. But I'm not 100% sure,
So let's just use the 7 cap to be conservative, 7? Right?
Okay, yeah.
So if you can raise each unit by $400 times 10 units, that's $4,000 extra a month, right? And then you times that by 12, that's about $48,000 additional annual gross income, right? And then we'll divide that by 7 cap, essentially $680,000 in forced appreciation, assuming you can hit those rents. Right? You can probably do a perfect burr almost and get, but it depends how much you need to renovate each unit. So let's just assume 10K per unit. I think yeah, I mean, I don't know what renovations in Atlanta. Oklahoma's a bit cheaper, I think, but okay, let's just make it 15K a unit. That's what you're 150 in. And they wanted how much? They want 1.5.
1.5, yeah.
So you're all in for 1.65 million. And you have the potential to increase the value by 600,000. So lost my train of thought there. So basically the value would be, we'll do the 680. So about 2.1 or 2.2 million potentially. And then you do 75% loan to value. Yeah, your new loan can be 1.6 million. So basically you almost get all your money back, right? You get your renovation costs and your down payment. You might have to leave a little money in the deal. Or assuming interest rates were like back to the 4 to 5s, you can probably do a perfect burr. If interest rates are what I'm getting at 7.5 to 8.5, you'll probably have to leave some money in the deal. But yeah, that's at a high level. That seems to be pretty good if that's true.
And then, so yeah, so we pretty much got that. We can jump into the,
Show me the P&L. Let's take a look at the P&L.
yeah.
Yeah. Let's see where they're lying.
Can you see that okay?
Yeah, so the expense is 74K. The income is 112. Okay, that's over 50%, right?
Oh, no, they have it in expense at 37.
Oh,
So
that's a
yeah,
lie. That's definitely a lie. Okay.
yeah, uh-huh.
So what I teach in the course, at least 50%, right?
Mm-hmm.
So out the gate, it's about 112. And so about 60K for six or about 65, about 60K in expense is realistic. What are they fabricating? Property management is
Excuse me.
10% about. Yeah, property management about 10%. Insurance, no way is insurance only $3,000 a year.
Yeah,
No
yeah.
way. I guarantee you, if you go through nrieg.com, which I teach in the course, they got the cheapest insurance possible. It's not replacement cost insurance. I guarantee you, if it's at least 10K for this type of property, I would say it's at least 10K for a 10 unit in their 2-bedroom, 1 bath, right?
Yeah.
So there's no way it's going to be that cheap. And then replacement cost, I mean, that thing burned down to the ground. It's not, you're going to need a lot of the replacement value to build it from the ground up. Expensive. So right there, that's why it's 37K. And then maintenance and expense. I mean, this guy might be doing it himself. Might be an owner who's like self managing. Yeah, I would assume at least 60K for expense.
Yeah, so let me see. I can quickly plug all this stuff in the calculator again just to take a look at it.
Yeah.
So, was it 112, 286? But
Yeah.
and then this one was, I'm just double checking, 11086 times 12. So, oh yeah, in cases like this, I guess it's best to use this smaller number to be conservative. But for the gross income, would you use what's on the P&L or the total monthly rent times 12?
I can see you saw that one course because yeah, I talk about you take the rent roll and you times it by 12, and it should be within 5% of the P&L, or 5 to 10% of the P&L. If there's a discrepancy, then you should look a little deeper. I think in this case, I mean, assuming it was, so it was taking the rent roll times 12, it was 132K. Here it's 112K, right? Is this full 12 months? It is.
Yeah.
Okay. I mean, it looks like they're having a collections issue, or from January 23 until now, they increased the occupancy of the property.
Okay.
So for me, I would actually want a more recent rent roll than this. I'd want it. I mean, it's almost end of May. I'd want it at least April, right? Like
April there.
Yeah, because the lender's going to ask for that. They're going to ask for that plus the most recent one. So that might explain why. The rent roll looked like it was in April. Was it April or was it? When was the rent roll?
Was it February to January?
Yeah.
Yeah.
So in this case, yeah, go back to the rent roll.
Oh, the rent rolls.
Yeah. So when was that generated? So that was
April 13th.
Yeah. So, but even then, a lot can change, right? Believe me. So I would want a new rent roll, and if they use Rent Manager, you can get that easy. They can get that easily for you, and then a more up to date P&L.
Okay.
But that might explain the discrepancy. But I would say this P&L seems reasonable, minus the expense. The expense is clearly not accurate.
Okay.
Right. So basically, your expenses will be at least 55K. So your NOI is about 55K, right? And the loan itself, that you're going to be negative on this property at that purchase price of 1.5 million with a 7.5% interest rate. It probably won't even qualify for the loan. I'll be honest.
Yeah, I think that was the case. I remember it was red 112. What is it?
Yeah, I know because my property barely qualified, and I'm getting 9,000 in rent, and my thing appraised at 700. This is double. It's only 11K in rent, right? So I mean, like, there's no way it's going to qualify that debt service coverage ratio. So this deal, you might have to go creative finance route.
And they offered that.
Oh, they did. Okay.
Yeah, let's see. What was it? So they said 400K down.
No way.
5.25 rate, and principal and interest over 30 years, or balloon in 3 years, and 1.25 in origination. 6 months interest only paid up front. 50K EMD.
Yeah, if honestly, it's so what I teach in the course is your price, my terms. Right? So you can give them 1.5 million, but you're picking your terms.
Yeah.
And no way am I going to down 400K. I can get a loan 25% down. It's less. Oh, it's about the same as 25% down. That's why would I want to go with them, right? Like, so if I were you, I would probably just make an offer that makes sense for you. And they either take it or leave it, and you just follow with them in like 30, 60 days.
Yeah.
After that offer. So if this was me, yeah, no way. Like I would probably want at most 10% down, which is 150K. I mean, do you have that amount of money or no? Or would you start to partner with somebody?
I do.
Would that wipe out everything you have though? So let's just say you need 150K to renovate this guy.
That's another thing that I wanted to talk to you about is the line of credit, because I was going to look at it with First Republic, because I have a property where I can pull it out of. And so that was going to be kind of where I use to do the rehab for a deal that I come across.
Yeah.
But I saw your shorts, and I saw what you were talking about, what you can use it for. You mentioned like student loans, emergency fund. Like, are they picky about what you're actually using it for? Like, if you did want to rehab a commercial property, like.
So basically, that's a personal line of credit. It's actually not backed by anything. So you have to have usually a good W-2, unfortunately. But what you actually put on your application and what you do with it, once I get approved, I can do whatever I want with the money. If that makes sense.
Yeah. Okay.
So what you say is, hey, I want to use this for my own home. Like, do you own a home currently?
Yeah.
You can just say, I want to use it for my own home to renovate it. I want to use it to cover taxes. I want to use it to buy a car, whatever, right? Just give an excuse. But after that, all they care about, once you use it, as long as you pay them. So yeah, I think it's good for 7 years. I love it. The interest rate's not bad. But what I was going to say is, so you have about, was it 300K, you would say, for this property?
A little less, like two something.
So let's say you have 200, right? So if you down 150, you only have 50K to renovate this property. And based on what we've seen, like, that's probably not enough. Like, you could probably do like maybe 5 units at best, about half the units, or not even. It depends on maybe if it's 15K, it's only 3 units. So what I would do if I had that amount of money is, at that case, I would say, you know what? I want to give you 0 down. My down payment is I'm going to renovate these units. Because if something happens to you and they foreclose on you, they inherit the property back with all the renovations you put into the property. So if I were to make an offer, it'd be nice if you could like walk the property, because you're so local. You can just say, hey, like, I want to make an offer, but can I walk the property? And then bring your general contractor with you. Just quote out 1 unit, because they're all the same, right? They're all, 2 bedroom, 1 bath. Get a quote and just say, hey, look, it's going to cost me this much money to renovate. This is what I'm going to do. LVP flooring, scrape the popcorn ceiling, repaint the kitchen cabinets or replace them, new bathtubs to make it more modern, new vanities, whatever you're going to do, paint. I'm going to do that for all the units. That's my down payment. And then see what they say, right? Like they might be open to that. I assume the property is owned free and clear if that's what they're offering already.
Mm-hmm.
Just make an offer that makes sense for you. You should get lines of credits. Like, if you have a primary residence, you can get some. There's some good ones out there. I think I teach in the course PenFed is one. PenFed for primary residence. And I think
What about investments? Because right now, I'm at the property I'm in right now. I own it, but I'm house hacking it. It's a triplex, so I got it like 2 years ago. I don't think there's really that much equity to pull out of it yet.
oh
But all the other ones I have that do have equity are all investments.
yeah, I think I think the one that I was looking at was called Schools First Credit Union, but I don't know if you have to actually be a school employee to qualify for that one. But I know investment HELOCs are coming back. Bank of the West might offer one too. So I can actually let me reach out to my I'm refinancing with Bank of the West right now. Let me email that guy to see if they do line of credits on investment properties. Last time I tried to pursue it, they kind of ghosted me, but I have a contact now, so I can ask for that.
Okay.
But yeah, that's a great way to renovate properties, to be honest, but it should only be used for renovations. Like I think, and down payments potentially too. So, but yeah, for this deal, I probably would as low down as possible. They might laugh at you. It's okay. But as long as you say, hey, I'm renovating the property, so like that's your down payment. Like worst case, if you foreclose on me, you get a fully renovated 10-unit apartment complex. So yeah, I think that's an option. So basically, or I would negotiate, you play ball, maybe 5% down. If they want 10% down, break it up over a couple years. Like, hey, can I give you like 10% or 5% at the close of escrow, and then maybe 5% after I do my cash out refinance? Because this project might take you 2 years to finish.
Yeah.
Right. Or I mean, it's going slow, but probably a year and a half.
A year and some change,
yeah. 2 years to be safe. To say, hey, you know what? I'll give you 5% now. I'm going to renovate this. I'm putting 150K in. I'm going to raise the rents. And then in 2 years, when interest rates go down, hopefully, and I increase the rents and increase the value, I'm going to do cash out refinance. I'll pay you the remaining 10% at that, or, whatever, 5% at that time. So you create it so that when you get the money, they get the money too. Like that's how I would structure it. And if they want more, you'd be like, let's say they want 15% or 20% down, I'll be like, hey, how about I give you 5 at the close? I'll give you 15% after I do my cash out refinance. Right. So there's so many ways to structure it. That's what I mean by you pick your terms.
Yeah.
But if they want 20% down, then I feel like you should have very low interest or no interest. So if I were you, I would try to play ball. Like throw out 3 offers with different terms that favor you.
Okay.
Right? Throw out 3 different offers that have different terms. Mix it all up, right? Then just give it to them and then just wait. They might reject it. Or if you don't hear anything, maybe they didn't like it, then you just follow up in like 30 days. But that's what I would do, to be honest. I would package what renovations you're going to do. I would package your proof of funds, and then I would package it with those 3 offer letter types. And then see what they do. Yeah. Because that's how you show you're really serious. You basically have the money that you can show, right? Like if you have a line of credit, you can show that. You can show that money. You can show your bank account, whatever, for the down payment. So, and then you can say, hey, like throughout, if they're local, like, hey, you can pop in and check on the property whenever you want. Like I'm
Mm-hmm.
renovating it, right? Like if they're local owners, or you can like drop by, take some pictures of the renovations and show it to them as a progress update, right? You can show them your P&Ls that you get on a monthly basis, right? It's
Mm-hmm.
all transparency. So that's how you build the trust, and that's how they want to work with you. Because like you're
Yeah.
just, but I tell them too, like now since I own apartments in Oklahoma, I say, hey, like you want to meet my property managers, you want to see my properties I currently own. I'm
Let's
renovating
take
right
them up
now.
there.
I can show you my property, how nice it's going to look.
Mm-hmm.
It
Yeah,
just,
that is definitely a good selling point, you know, because
yeah, like you're
okay,
local,
yeah.
dude. That's your advantage. You're
Mm-hmm.
you're local. Like you can literally like, hey, I'm gonna renovate it and I'll show you progress posts along the way. Once you see one unit, copy and paste. That's how all the
Mm-hmm.
other units are gonna look. So like if you can sell that, dude, I guarantee you can get probably no down or low down.
Okay, okay.
Me, I never got a deal like that yet. but but that's how I would package it, dude. Like seriously, you should probably write off, go to the course. I think do I have templates? I might have templates for creative financing. If not, just Google it.
Mm-hmm.
Atlanta County or whatever county. Um, you know, they might have those forms. Oh wait, they might have those forms for free. Like all my Oklahoma forms, I found for free online. I just use those
Mm-hmm.
exact forms and just make like an LOI, make it really simple. Like when you draft the LOI, I do have an LOI template in the course. So just
Mm-hmm.
take that, make it real simple. Like, break it down for them. The simpler it is, the better. If you complicate
Mm-hmm.
things, people say no. So make it real simple, break it down. I'm doing, do a 0% down deal, do one where it's 5% down, do one where it's 10% down, do one where it's 15% down, and make it 5 you know
Okay,
um,
that's a fact.
up front, and then maybe 10 back end it,
Mm-hmm.
right? Because let's say it's a 3-year term or 3-year hold, so I would just put many options down and then package it with your proof of funds and your renovation plan, and just sit and wait. That's all you can do. you know
All righty. Yeah, no, I got that. That's my homework for this
yeah,
one.
man, you might be my first, the fastest a month. Yes. What am I?
No, I'm actively trying to market. That's why I want to go ahead and but I started looking at, I was like, maybe I needed to start looking at off market because all these properties, they're over a million plus. I was like, maybe I need to go to where, because like you said, in Oklahoma you got a property for 500K,
Yeah,
a 26 unit at that.
yeah. I mean, this isn't terrible. I mean, this is about 150K per unit. That's
Hmm.
not terrible. Oklahoma's about 50K per unit.
Hmm.
But that's pretty good for like being in a major metro.
Yeah.
Like you're in a major metro, so yeah, like my fastest student got a 35 unit apartment complex, but she got the apartment under contract first, then joined my mentorship. So
Hmm.
technically, I can't take credit, but yeah, like I just said, make those offers, and then you just sit and
Hmm.
wait, and you just pop in once in a while. Hey, you still thinking about my offer? Because those offers, they usually expire after like 7 days to give a great sense of urgency.
Yeah.
In the back of their mind that, oh, I got an offer, and it seems like a
Hmm.
serious offer. So they'll try to fish around, right? Try to talk to a bunch of other buyers. They won't be serious at all. And believe me, they'll be running back to you if it was meant to be, right? so, it's it's a conversation starter. That's all.
And then you got this 3% buyer's fee for this agent. That's
Oh,
you know that's another thing.
yeah. I mean, so that's going to be
I
what
guess
you're going to have to pay.
like 30, yeah, like 35, like 35K, something like that.
You know, uh, another thing you
45.
can do is you can negotiate seller repair credit.
Mm-hmm.
So what I did on my 26 unit was I inspected everything, got my contractor to bid, and the contractor had around 120K worth of repairs that need to be done.
Mm-hmm.
I literally asked for 120K of seller repair credit. If I got that, I would have down $0 on the deal.
Mm-hmm.
Down payment was 125K. But he, of course, countered me, and we ended up settling on 60K of seller repair credit. Right? So,
Mm-hmm.
option that you can do is you can raise the price by 3%, ask for that 3% in seller repair credit, to then use that to pay
The buyer's fee.
the buyers. So you're leveraging, right? So you have a bigger loan a little bit,
Mm-hmm.
right? But you're leveraging it, so you don't have to use money out of your own pocket because you want to save that money for renovation.
Mm-hmm.
So for my strategy, what I teach is you want to use your personal money to fix things so you make more money. Anything else you try to defer or delay or finance if possible.
Mm-hmm.
If I were you, I would try to raise that 3% of the price after the seller repair credit, and then use that seller repair credit to pay that 3% commission. So you can
Gotcha.
save that to renovate maybe 2 more units.
Mm-hmm.
So that's how I would do it. That's what I mean. I love creative finance. You can literally do whatever you want to make it a win-win situation. And
Mm-hmm.
as part of this pitch, watch my course on it, but you get this pitch why this guy already knows the benefits of creative finance. That's why he's already offering it.
Mm-hmm.
The only thing is this seller, he's thinking too traditional. Like, oh, he's the bank. Like you need 25% down and 5% interest.
Yeah.
It doesn't work like that, right? Not if he wants that price. So when you're talking to the owner, make it very clear, hey, I'll give you your price, but are you okay giving me terms? And then that starts the conversation. And that's when you pitch your 3 offers, right? You say,
Mm-hmm.
hey, offer number 1, offer number 2, offer number 3. Let's talk about it. Like, these work for me. This is why. Like, which one works the best for you? And then based off that, you can kind of tailor make it even more.
Okay.
Right? If I'm free, man, you just have me on the call. You call the guy, record this
No,
thing.
I will definitely do it. I will definitely do that.
Yeah.
This is just 5 days ago.
Yeah, dude. Oh man, I wish I wish I got on you. I'm like, you gotta act fat. Like, do you get this stuff? You need the same day, but then it's okay. You're still new, right? But after you do this one time and you fail, it's okay. Now you know how to do it. You know exactly how to analyze deals in your market. Reoffer method, right? You don't have to sell creative financing on this deal. He already knows about it.
Yeah.
So it's not that hard of a sell. They're more sophisticated.
Mm-hmm.
Yeah, man. I would call those people up and say, hey, I'm gonna give I would talk to those people, say I'm gonna give the price, but I want my terms, so I'm gonna give 3 options of terms that work for me, and I'll show you proof of funds, and if they accept it, or can I view the property in person? Can I at least see 1 unit in person, and then to get some bids and quotes to see what I want to do to renovate this property. So yeah, that's what I would do. So that's what I love about creative finance. You can make the deal work, even though the price doesn't make sense. But if you remove price out of the equation, you're good, right? Like, and right now interest rates are terrible. So like, if you can get seller financing for 2-3 years, by the time you refinance and you raise the value, like interest rates hopefully are more normal. And dude, you would have done a perfect burn in 3 years, got all your down payment back, get your renovation costs back, and then you can buy another one. That's how you scale. That's how I'm scaling, right? So yeah.
With the seller finance, so they're looking to possibly finance this for 30 years or just do a balloon in 3 years. Are you reading that correctly?
Yeah. Honestly, balloon 3 years all you need. If you're gonna renovate,
Okay.
3 years is plenty of time, dude. Like for 10 units, that's plenty of time. You could at worst do like 2 months per unit, which I don't think is gonna be the case.
Yeah.
Like, so he said 3-year balloon already. So one of your offers is gonna be a 3-year term. Right? Like right out the gate. That's gonna be a 3-year term. So, or if he wants a down payment, like if you do 5% down, like, can you defer interest for a year? That's what I did on my mobile home park. Like I can say, hey, let's say your monthly loan payment, I'm making up numbers, like let's say it's $4,000 a month. Can we defer that $4,000 a month? So that's $48,000 a year. Can I defer that to the back end? So when the balloon is due, I'll pay that on top of it.
So in addition, 48,000 times 3, you would pay all of that on the back end, or
No,
just
just
for
for
the
the
first
first
year?
year.
Okay.
I don't think you can do it for a whole. If you
The
do
whole
that,
thing.
I mean, if you can do that, do it. All right,
Yeah.
because that means that all your cash flow you take, you renovate the properties.
Yeah.
But from my experience, if you ask for 12, you might get 6.
Okay.
Because yeah. But if you can do that, by all means, do it. Like, but usually they kind of want some money because they're used to getting that monthly cash flow. But if you can kind of sell them like, hey, for the first year, can we defer it? Or just put that in the offer, payments are deferred for the first year and it'll be due on the back end of the loan. That's what I'm doing right now for my mobile home park. Like, I deferred interest for the first year, and they said, why do you want to defer? I'm like, well, I'm renovating this property. Like, I'm putting money in the deal. Right. So you always have to think like skin in the game, right? You have skin in the game by down payment, by renovation, and by paying interest. The one that benefits you the most is the renovation. So just focus on that. Like, I'm going to renovate these units. So yeah, that's how I would definitely pitch it. So we can go on for days of creative strategies that you can do. Like, it really depends. Like, just talk to the owner, see what they want. But I missed that right there. 3-year balloons. That's enough time for you, to be honest.
Okay.
I think in 3 years, more than enough time to renovate all these units and raise it to $1,500 in rent. Easily. I struggled with my 20 unit. It took me like about 13 months to do 14 units.
13 months to do 14 units, you said?
Yeah, but one unit was completely full gutted. So that was a full job. But this one, I don't think any required a full gut. So yeah, man, if I were you, tomorrow latest, get those LOIs drafted up for creative finance and submit your offers with those proof of funds. Yeah.
Now, as far as lenders, I haven't gotten, pre-qualified, or I haven't started speaking to any brokers yet. Just because, like I said, I wasn't expecting, I'm just not jumping into multifamily. So I've used Lending One. I don't know if you've heard of them. I've used them in the past. But that's a hard money loan with decent terms.
Yeah, well, it's probably like what, 12% interest only?
I don't think so. I think they're pretty reasonable. Probably I think I asked them. I think they said about 7 to 8%.
Oh, that's pretty good actually, because my normal loan is about 7.5. So if that's
I did a cash out refi with them a couple months back, and I want to say I have like a 6.75 or something. But it was for single family.
Wait, how many rentals do you own again?
7.
And then how much equity do you have amongst all those, would you say?
The two, let's see.
Because there's something, very few lenders do it, but you can do a cross collateral loan where you put the collateral of one of your rental properties, the equity, as collateral instead of a down payment. Not many lenders do it, but I always ask.
Let's see, 137. I'm like 320, 325.
325K?
Yeah.
Yeah, so maybe you can ask them, like, hey, like, would you be able to finance this property for me? Let's say you want to use a DSCR loan or like a hard money loan. So DSCR loan, they don't really look at you personally, right? They look at your tax return. They just look at the property and then what you can do with the property. So this is another option in case creative finance doesn't work out for you. Because you have properties that you finance with them already, right? Are all 7 of yours financed with them or only a couple?
No, just one.
Yeah, so let's say you just have one. You can maybe try cross collateralization where they will be in a second lien position on those properties. And they'll use that equity in lieu of your down payment.
Oh, okay.
right? So, I mean, you may not even want to do it, but what some people do is you can put all 7 of your properties that you own, all your rentals, into one big portfolio loan
Mm-hmm.
under, let's say, lending one, and then whatever equity is built in there, you can use it as cross collateral for the down
Mm-hmm.
payment on this property, for example. I've
Mm-hmm.
seen it done, but like I said, usually it takes a small community bank or if you have a really good relationship with them. But it doesn't hurt to ask, because worst case
Okay.
is they say
Will
no.
do.
They just say
Mm-hmm.
no to you, and now you know. I ask all the time, even to this day, because I have single family homes of $500,000 of equity. Believe me, I'm always asking, hey, I got my 26 unit has this much equity in it. Are you willing to use it as cross collateral for the down payment on this property? You never know. They might say instead of 25% down, they'll take 10% equity, so you get the down 15%. And that's a big difference, right? That's the difference between you having renovation funds or no renovation funds.
Mm-hmm.
So yeah, just keep asking. I mean, you're gonna get a lot of no's and rejections, but you
Yeah, I
know,
know you mentioned you talked to a lot of lenders.
yeah, man,
Um,
dude. Just for my 20 unit, I talked to like at least 10.
mm-hmm.
I get a lot of no's, but you just got to keep on going. Um, so yeah, that's well. Do your 7 units cash flow? Are you cash flow positive on those, or those are more appreciation?
Mm-hmm. Cash flow.
So you're positive, right?
Yeah.
So yeah, technically you can dump all. Are your interest rates good on those properties, or like what's the interest rates on those properties on average?
Yeah, so let's see. For this one I have like a 2.25.
Oh shoot, yeah,
Uh yeah. So I was a mortgage lender back then. So I got my properties and I got like a point discount when I purchased my own properties. So I have
okay,
super low rates.
okay, that's a harder pill to swallow then. Yeah,
Yeah, yeah.
okay, because I've seen people like you said they like one day in the future like I could put my 26 unit and my 20 unit in the same loan and then
Hmm.
do a huge cash out refinance, pull up money from both, and banks like it because now it's 56 or 46 units under one.
Hmm.
And then you can do a huge cash out refinance, and then if there's still equity on there, you can use that as cross collateral for another property. But I think given the current lending climate, I doubt cross collateral is going to be popular at all. It's just too risky.
Yeah.
But you never know. Like I said, each bank has different appetites for different things. I mean, I mean, you're in the industry, so it the worst case is a no.
Hmm.
Or if you
I
work with
guess
brokers, some might get creative.
I'll look into that
Yeah.
cross collateralized.
And I have a lecture, a module on it. So go check out that
Okay.
module. It's a lot of videos I told you.
Yeah, yeah. I want to say where am I? Like module 4 or something, 4 or 5.
Yeah, I think the
No,
creative finance one was super long. I think it's because I pretty deep dived into it.
but that's good. That's the climate we're in. Where you're gonna get
I mean,
those
it's
types of
gonna
deals.
kill right now. The creative finance and off market, it's gonna kill right now. That's why I'm kind of sad that I can't buy right now. I'm not a buyer, but dude, if you know how to negotiate and find off market leads, which I out teach, you already know some methods, dude, that's how you kill because they want their price. As long as
Hmm.
it's your terms and you can add value, you're golden.
Hmm.
Big deal. Like I said, if you can get your terms on this deal, I know you can get at least all your money back, or maybe leave
Hmm.
money in the deal. And you own a 10-unit apartment complex, like
Hmm.
you just double your portfolio, right?
Hmm.
And it's just you, right? There's no partners.
No, yeah, just
Yeah.
me.
So that's impressive, like what you've done already. But that's how you take to the next level is um once you hit 1,500 rents at that every year, you just slowly raise the rents 50, $75 over 5 years. Maybe it'll be closer to like 2,000, and then you do
Hmm.
another cash out refinance, right? So one property is all you need. One good apartment complex is all you need to basically start the compounding. I mean, you're already kind of seeing it probably with your 7 units. Um,
Yeah. Well, see, at first I had brushed it off, just looking at a straight offer, cash offer. I looked at the 400K down. I was like, oh, they're out of their mind.
I used to be the same way, but
Yeah.
if you pivot to how can this offer make sense for me,
Hmm.
then the creative side starts to come out, right? That's what I mean. Like worst case, if he says no, you're getting reps on how to pitch creative financing. That's
No,
going
I
to help
agree.
you for future deals. Your worst case is you get better at pitching creative financing. If he says no and laughs at you,
Yeah.
right? It's okay. It's going to happen. You can't, I mean, this is your first, you can't get, if you get your first deal this fast, I mean, shoot, that's amazing, right? Like it took me like, geez, like I probably submitted like 30, 40 offers before I got my first 26 unit. And I got,
And that's what it was seeming like with how overpriced some of these things were, and
yeah.
the asking price.
And I'll tell the brokers out the gate, I'm like, the only offer that makes sense for me for this is this. And I said, I don't want to waste your time. But if the guy's willing to give me terms, I might be able to go to that price. And then the broker will sometimes just brush you off. But if you talk direct to the owner, they're a little bit more sophisticated. They already know about seller financing because they might have bought their property through seller financing. But right now, dude, I might have to go seller financing too because my tax returns look like garbage with all the value-added real estate that I do, and yours will too. Believe me.
And that's another thing too. I was thinking of just because I quit because I was a W-2 employee at my lending job, but I quit that last year, to go full time in investing. I was just gonna pay myself a W-2, like just to make sure my DTI is still in line, and just run that, so I can go ahead and get those lending credit, those line of credit with a
yeah. So if I were
institution.
you, get those line of credits now because once
Yeah.
you get over that property, let's say you get it.
Mm-hmm.
Oh my God, like because think about it, that 150K of renovation, if it's depreciate over 5 years, you don't do the accelerated depreciation, right? So 150 divided by 5, that's 30K of tax write-off a year, right? But on top of that, when you start to renovate, like people are going to start leaving, right? Like the moment you start renovating one unit, the tenants are going to leave because they oh, this new owner's coming in, he's renovating it. So your P&L is not going to look pretty the first like 2 years. And when you do a cash out refinance, like the banks don't see it as money because it's just more debt.
Yeah.
So eventually, like I hit the point where like even this Bank of the West deal, I had to like give so many explanations to get that approved. If I just did creative finance, no questions asked. I don't have my tax returns at all. So like honestly, like it might be the only way I buy real estate. Like
At this, yeah.
So like, and the more you've done it, you have a better track record too. You can like, I did seller financing for my mobile home park, so I can say to people moving forward, I've done it before. I own a property where I've done creative finance. It's nothing new for you. So, like I think this is a great time. But yeah, right now, get all lines of credits that you can get. Like what before I leave my W-2, believe me, man, I'm gonna get every HELOC possible. Whatever I qualify for, I need to buy my forever home that I'm gonna live in. Put a HELOC on it and put some HELOCs on all my other rentals. My DTI is gonna be so bad.
And then you're out of there.
I have that HELOC locked for years, and at that point, I can be like, all right, I'm done with my W-2, or I just can do creative finance only. So,
and First Republic, they're still offering out that personal one.
Yes, I believe so.
Because I saw that they were bought out by Chase, like they were one of those banks that like failed, and
it was funny because I was Chase, so it was funny that Chase bought it. But to my knowledge, let me connect you. Just message me after this, and I'll give you my contact of who helped me do mine. And hopefully maybe they can help you if they still offer. But sometimes just know that during the merger and transition, like sometimes they don't care. They just want to like give out many loans as possible because they know that they might get paid off. Like Bank of the West got bought by Bank of Montreal. And the funny part is the guy I was working with, he left jobs. He swapped companies, but he was just saying right now, because we're in this weird gray area being bought out, we're very liberal of what we approve. So you can kind of swoop right in and kind of get a liberal loan approved that maybe they would have not approved had it been, a couple months earlier. So I would still say just apply for as many HELOCs as possible. It's always nice to have an emergency fund. Like right now, I'm dipping into my HELOCs. I never thought I would, but I'm dipping in because those renovations, you might get quoted 150. It might end up costing you 200.
Yeah.
right? Like my 20 unit, oh my God, all my AC units are end of life. And to replace each
Wow.
AC unit is like 3,500 times that by 20, right? So if I replace
Yeah.
one AC unit a month, that's my rent's only 9,000. 1/3 of my rent is going to
Mm-hmm.
AC unit.
AC units, yeah, and not counting all your other expenses.
Yeah. So literally my
Yeah.
cash out refunds I'm doing, that money is just going to be used to fix all the AC units as they break.
Mm-hmm.
So that's just C class, right? Unfortunately. And why I mentioned it is I saw the same thing. It looked like my 20 unit, these AC units, are costly, and it's just discouraging because like my rent's like 550, but it's costing me 7 months of your rent to pay for an AC unit. But
See,
you have to look
yeah,
at the long-term view,
long
right?
term. Mm-hmm.
That's what I mean. Like, even if it's stabilized, I can't necessarily leave my W-2 job just yet, right? I still need some
Mm-hmm.
money to take these hits, and the real estate has to be self-sufficient, right?
Mm-hmm.
So, yeah. Any other questions about this property? Like, you should literally be making offers tomorrow, man. I'm
No,
serious.
I will. I will. I'm gonna
Yeah.
reach out to this agent. Yeah, none for the property. I think I just had a couple of like notes that I wrote down, like Fannie Mae financing. Have you looked into that? Like, kind of what they're. I know. I think that's like the coveted loans for multifamily. Is like by getting like Fannie Mae.
Yeah.
Um,
I mean, I think the properties that I'm buying, like, there's too small for
okay.
my knowledge, and the price point's too little. Um, but I haven't had much experience, honestly, because they're very strict in terms of like occupancy. They want like, 80, 90%. Has
Mm-hmm.
to be a certain price per unit. They have a large prepayment penalty if you do a cash out refinance, or they might allow you to do supplemental. So
Mm-hmm.
I haven't really done it, but as I think my property stabilize, I might look into it, right? Like,
Okay.
but I think just my units are too small. I don't know why. This might be self-limiting belief on my part. And obviously I should probably consult a mortgage broker, but I feel like I have to be at least like 50 units plus in a good in a primary market. I feel like they're gonna want like certain price per unit, a certain amount of rents, and I think Oklahoma State just doesn't cut it out for them.
Mm-hmm.
So that's why Bank of the West is probably dominating Oklahoma City. They're probably the best bank for Oklahoma City, to be honest, in those smaller markets. But
But they're nationwide, right?
they are nationwide, but I think they just have a large presence in Oklahoma. Like, they have
Okay.
a bunch of branches everywhere. So I don't know for Oklahoma. I didn't really explore that option, to be honest. I mean, I had a
Mm-hmm.
broker. I guess he would have presented to me if he had it. But, I was looking at some 50 unit deals, and I guess I didn't get in that deep because I had a property. I didn't know at the time it was 50 units in Enid, Oklahoma, actually near my 20 unit.
Mm-hmm.
And it was all 100% Section 8.
I watched that video like earlier today, but yeah, I was
Yeah.
gonna ask about that.
Yeah, it was 100%. Dude, I hate myself for this. So it was 50K per unit, which it's probably high end for that market. This is a tertiary market, right? I literally met the owner in person.
Mm-hmm.
I drank whiskey with him, and he owned it free and clear.
Mm.
And I underwrote the deal 25% down. I think it was like 5% interest or a little bit less. And the cash on cash return was 6%. And because I was so fixated on that 10% cash on cash return, I let the deal go. But think about it. Would you rather want 10% return, or would you rather have 6%, but it's guaranteed the first of every month automatically? This government will pay you every month to your bank account.
The guaranteed, like,
Guaranteed.
yeah, you don't have to chase, like you said, chase down tenants just
You don't
to.
chase down tenants at all. And I'm just like,
Mm-hmm.
oh my God. And then, like, I remember I was in the unit, and then he self-managed, or he had an on-site property manager that was there. I met her, but he took care of the properties, right? And then there's a wait list of people wanting to get in. So I'm just like, my God, I wish I bought that instead of my mobile home park. Oh man, I
Mm.
wish because that was around those 2.5, so it would have been like 25% down. So what is that, about 600K?
Mm-hmm.
That's how much I put into my mobile home park,
Mm-hmm.
and that would have been guaranteed rent. I was like, oh, and then what I didn't realize was because it's Section 8, you might be able to qualify for a HUD loan. where it's amortized over 40 years.
Oh, wow.
I didn't realize that piece.
So if a property is fully Section 8, then that's one of the financing that opens up to you,
I
or
think
is it
so.
a
I think
certain
it's
amount?
because they want to encourage low income housing.
Okay.
And then that property, and which threw me off of that property too, is he had a lot. So he actually developed those 50 units himself. That was like 50 units between like maybe 6, 7 buildings. But
Mm-hmm.
he had another lot where I could have built another 8 units. Yeah, I think because I was so new, I was just so overwhelmed between like the loan and like trying to build this like these 8 units. Like honestly, knowing what I know today, I would have said, "Hey, I want to get a HUD loan. It might take me 2, 3 years to qualify for this HUD loan. Can you seller finance me this deal until then?
Mm-hmm.
Bridge until I get this HUD loan, and then I want to figure out how I can, using the HUD loan, cover the cost to build another 8 units on that
Mm-hmm.
land." That's what I would do today.
Mm-hmm.
But back then, I just didn't know. But I was like, that's the one that got away, man. It's like I
Where are
remember
you at?
today, it was 33K a month in income, and with Section 8, it already builds in. So in 2 years, it'd be 35K, something like that.
Mm-hmm.
Another 2 years, 37K. And I just thought, like, knowing what I know today, like, dude, just the peace of mind. The first every month you log in, guaranteed
Oh, man.
$33,000 in rent. The only thing you have to collect is there's a common laundry, which was coin laundry.
Mm-hmm.
Okay, a property manager might steal from me, right? But you can install cards there, or they can, like pay for the coin cards and then
Mm-hmm.
pay for that. But man, I was just like, I threw away a deal over 4% more cash on cash return. But this is, I guarantee you, if that wasn't Section 8, I had 10% cash return, 10 return. I buy it, 2 tenants stop paying me. It's basically a 6% cash on cash return,
Yeah. Mm-hmm.
right? Like knowing what I know today, I was just like, but dude, that was like my first, before I had my first deal. So I think I wasn't thinking like what I'm thinking today. But
Mm-hmm.
man, I don't know. Once I saw that mobile park, if he didn't sell that deal, I might reach out back out to him and say, hey,
Yeah, that's what I was gonna ask. You're still trying to sell your mobile park, or maybe I'm gonna partner with somebody. I don't know. Figure out how to get that deal back again, because that seems like a sweet deal.
like from my letters, I had a guy who had 120 units. I had a guy that owned 80 units, and I had a guy that owned 50 units. So, you know, definitely not thinking about partnering right now. But if I were to partner, honestly, it'd be people who are part of my mentorship and course, right? Because you guys are
Mm-hmm.
educated the way that I am. I mean, I'm teaching you guys how to think
Mm-hmm.
and how to view things. So, down the road, definitely when I leave my W-2 job and just hit my fat fire goal, I haven't thought about it yet, but that's when I would probably start to partner, I'd say,
Mm-hmm.
if I want to get that big. Because
Yeah.
my kind of gripe is like, honestly, me and you, I mean, honestly, if you get that 10 unit, you cash out refinance in 3 years, you buy like a 20 unit, cash out refinance in another 3 years, you have a pretty decent portfolio and you probably don't have to work again.
Mm-hmm. Well, I'm trying to get to 100 by like pretty quickly, like
100
a
units?
year. Yeah.
By when?
Year and a half.
Wow, that's I
Yeah.
I mean, if you raise money potentially, it's like I guess believe me, I hit 90 units. It's better to own like 50 good units versus like 100 units where like maybe it's not a staple
Mm-hmm.
in my experience, because like it's just a number, right? Like it's just kind of arbitrary number. Like I was very fixated just like you, but honestly, once I started to scale at this point, I'm like fine. Like as long as it makes sense and then you have the capacity to do it,
Mm-hmm.
by all means do it, because keep in mind, people that syndicate, they might own 100 units, but they might own like 10% of 100 units.
Yeah, no, just like
Units.
just me. Like I'm like me and the wife, not no partners.
Yeah, I mean, I think
Yeah.
that's ambitious. I mean, I did 80 units in 8 months and I'm feeling the consequences today.
Mm-hmm.
But if you told me 100 units in 10 years, I'd probably say yes, easily.
Mm-hmm.
You could easily get 100 units in 10 years.
Mm-hmm.
You just like I said, you just get a small apartment, cash out, refinance it in 3 years, then you buy another one. Now wait another 3 years, you cash out, refinance the one that you just bought and the one that you bought 3 years ago. Take that money, you buy another one. Easy.
Would you say it's just access to capital would be the hardest factor, or just everything, managing it, renovating it, like stabilize, like all of that to get to
So
that 100?
once you can do one full cycle,
Mm-hmm.
prove it yourself, everything else becomes easier.
Mm-hmm.
Right? Because like for me, I haven't gone full cycle yet, but
Yeah.
I know my Enid market now. If I go full cycle, I know exactly what the rents are, exactly what renovation is, exactly how to manage it, exactly how to advertise it. I have a team there already, right?
Mm-hmm.
At that point, if I want to take down that 50 unit, do you think I can raise money? I could probably raise all the money because I
Mm-hmm.
have a team and system there, right? Um, so, and if capital is an issue, well, fortunately, you're gonna need some capital to play by yourself, right? Like
Mm-hmm.
that's why I have HELOCs, why I'm playing by myself. I have access to a lot of capital. Obviously, you have access to a decent amount of capital. Most of my students are the ones where they have access to a lot of capital, right?
Mm-hmm.
But like you said, like once you get one and you snowball it, it just keeps on compounding, right? So I, I just I just kind of give you that caution because I was the same way. I want 100 units. Like for me, it was 35K in passive or 20K in passive income by 35. I'm 33
Mm-hmm.
right now. That's 2 more years. But like I'm probably not going to hit it, but I don't want to make myself seem like I failed,
Mm-hmm.
right? Because like what I've done looking back is way more than most people have done. I mean, even you with 7 units, that's way more than most people. I'll be honest,
Mm-hmm.
right? Like, so just I think if you just can get a unit like that, let's say you get this 10 unit and you can go full cycle in like 2-3 years.
Mm-hmm.
At that point, you can do it. And then you can buy a bigger one. So maybe you get a 20 unit. And then you do another 3. Now you have 30 units. Then you do another one. And now you do 40 units. At that point, you're
Mm-hmm.
getting close to 100, right?
Mm-hmm.
I look at me like I'm selling my mobile home park. I'm going back down to 50 units. I get my money back. My 20 unit, I'm getting my money back. My 26 unit, eventually I'll get my money back. I can pull that money in. I can buy a 50 to 100 unit. There you go. One deal.
Mm-hmm.
I just hit the goal. But I'm learning now when the mistakes are smaller.
Yeah.
When I make a mistake on 80 units, right?
Mm-hmm.
So a $500 mistake times 80 units, it's a bigger mistake. Versus you, if you get a 10 unit, 20 unit, you make one mistake, it's just that mistake for those units. So
Mm-hmm.
I really think you asked me 2 years ago, I probably would agree with you. But just going through it today in my personal experience, like, dude, like it's not like it's gonna stress you out a little bit too much because everything's gonna hit you at the same time. Like I'm getting hit left and right every day. Like something's going wrong in my 20, something's going wrong in my 26, something's going wrong in my mobile park. It just that constant beating, it makes you discouraged in doing real estate. But you can scale there if you do creative finance and you're able to
Mm-hmm.
value it. So if you creative finance, low down, put your money for renovation, add value, cash out refinance. That's how you can go
Mm-hmm.
fast. But I still think it's going to take like 2-3 years to stabilize each asset. No
Mm-hmm.
way around that. I think that 10 unit, honestly, if you went fast, yeah, you could probably do it in a year. I mean, that's
Mm-hmm.
being you're blazing. Like, move it, kick out a tenant, renovate it. Once it's done, lease it out, kick out another tenant, renovate it. So it's doable, but maybe it's possible because it's you and your wife, and if you're not like full-time W-2 or locked down to that, it's possible.
Mm-hmm. Yeah.
But a lot of things out of your control, right? Like what was if you can't find contractors? What was if interest rates are not good? So I think you can do it, and you just have to be a little bit patient. I think that first deal will seem a bit slow, but once you cash out, refinance that's where the magic happens with compounding.
Mm-hmm.
I'm only speaking from experience because I owned my first apartment for about almost 2 years now. But I'm not going to cash out refinance anyways because I'm at 4%. Like,
Yeah.
why would I cash out refinance to 7.5? I'd rather wait another year or two when it's maybe 5 or 6, then I'll do the cash out refi.
Mm-hmm.
So I think Because believe I was the guy. I closed on 3 deals in 8 months, and I didn't even do the renovations yet on those properties because I was so focused on just scaling. If you're too focused on scaling, what happens? You're gonna drop the ball on something else, and
No, I agree.
that's what I experienced. To be honest, I probably could have finished my 26 unit and my 20 unit faster. That wasn't distracted by my mobile home park.
That's what I was gonna say. If you had stuck the course with multifamily, like
Yeah.
apartments, instead of the mobile home park, do you think you would have been, obviously, you'd be in a better situation, but would you feel the same way if you didn't have that mobile home park?
Okay.
Maybe
So
because
yeah, no, I actually thought about this because I talking to my girlfriend about it. But basically, okay, let's say I put that 600K down into that 50 unit, right? And I'm 6% cash on cash return day one, guaranteed rent, right? At that point, that property is, I'd probably say for the most part, turnkey, I'd hope. Maybe maintenance here and there. And I'd probably want, I would wipe out all my money, right? So I'd probably save 100K line of credit just for that property. You might be right. I don't know.
yeah, I think it might be the mobile home park that
I think
has
that's
you kind of jaded, because if you
probably.
found properties, yeah.
So, okay, I guess rewind that. So, yes, the fact that I have my mobile park, because I'm doing 2 different asset classes, I'm distracted, right? But had it just been apartments,
Because that puts you at 96, units.
yeah, I'd probably be, about 96. Yeah, but you're right, about 96 units. And that one will be more passive because it's already rented out.
Fully rented, single Section 8, so.
But then that one, it's not as much value add potential, right? Because it's just more of like turnkey, right? I'm kind of paying market value. It's guaranteed rent. So technically, if my intention is on the other 2 apartments, yeah, So I think maybe you're right. That's the whole point of you stick to one asset class, right? So
and then diversifying. You have 2 value add plays. One's
stable,
and then another 2, maybe another. So because you have the option to switch from Section 8 down the line, right? Like to go ahead and because did you know if those were market rent at the time, or were you still under rented?
I think it's 30. I can calculate backwards. It's 33,000 a month, 50 units, right? So it's about 660 a month. That's actually more, but they're probably like 2 bedrooms. Mine are 1 bedroom or studios. I'm getting about 550. So that's about right.
So you probably get
maybe 700.
700, yeah.
Yeah. So, but yeah. So okay. So to that point, that's why I'm learning doing this. Like, if I didn't buy my mobile park, that could have been my turnkey property that's giving me some cash flow and stability, and it's more passive, right? And then I can focus on time and attention. So yeah, actually take that back. I could have hit 100 units in 8 months, so I guess it is possible to do it, but you'd have to do one asset class, but it's hard to say because I owned. Yeah, it's hard to say because I can look in retrospect, right? Hindsight's 2020.
2020, yeah.
Fortunately, you can learn from my hindsight, right? But yeah, technically, I probably could have hit 100, but I don't know. That'd be too many units in one market, though. Like Enid is a smaller market, I would say, and like I guess what I'm trying to say is no one can knock on you if you kind of took it a little bit slower. I would say we're relatively young, right? Right, like I can literally not buy a piece of real estate ever, sell my mobile park, and be at 50 units. And if I told you I bought 50 units in 10 years, you wouldn't say, oh, it's nothing. Right. And imagine the next 10-year segment in my life, I buy 100 units. I'm at 150 now. The next 10-year segment in my life, I buy 200 units. I'm at 350. Yeah. At that point, it's not going to improve our quality of life, right? At this point, you're just passing on a bunch of real estate to your kids, and they may not like real estate, right? They may hate it. So, it's just kind of like, at what point do you have enough and you want to stop, or at what point is it not worth it anymore, right? So, maybe I hit the point where I own enough units and I don't want to deal with this anymore, and I just invest with people who invest for me. Like, I'm hoping one of my students is the one where they know it. I just can give them money to invest, and they know how to manage their properties, right? So it just really depends on like what your goal is. Like, is your goal like more lifestyle, or or you just want to build a certain net worth?
Lifestyle. Because right now, me and the wife, we do a lot of traveling. So
Yeah.
just having cash flow to where, it's paying everything and then some. Well, I mean, not, and it funds pretty much everything, like 30, 40K passive, and it's just all our other businesses are still, doing it. So it's just a supplement.
Yeah, I mean, like, my goal was like 20K a month, but like to be honest, I mean, I'm in a high cost of living market in California, but if imagine you had like a paid off house that you're living in
Hmm.
and you're getting like 10 to 20K a month, I mean, honestly, that's good money, like, for traveling. So you'll be surprised. Sometimes you don't need as much as you think. I think a lot of
Hmm.
people, and I fell into that trap, say 20K because it just sounds kind of cool. And like, it sounds like,
Hmm.
oh, yeah, it's pretty good money, right? That's um, double, pharmacist salary. But you'll be surprised. Like, you don't may not need as much as you think, but if your expenses are very minimal. So like
Hmm.
for me, I might kind of pivot a little bit where like, I buy these units. Then if I hit like 20K a month passive income, I might be more focused on like maybe paying off my primary residence that I live in. Because
Hmm.
once you basically have no monthly expense and you're getting like, you're just paying property tax, insurance, utilities, which is maybe like, let's say 2K a month, and you're bringing in like 10, 20K. I mean, geez, that's 18K of just house money. And, you can travel to like, I just went to the Philippines. You can get a luxury beach resort for like $200 a night,
Hmm.
everything, right?
Hmm.
And that's not even that much money. That's just a normal hotel in
Yeah.
we're staying at. So that's what I kind of came to realize a little bit because I want to do the same thing. I want to just retire early, ideally before I have kids and just travel.
Hmm.
Um, and I think it's doable with like just my current portfolio. But the only thing is they need time to like marinate because believe me, if you bought 80 units in 1 month, like or like in 1 year, and it's all value add, you cannot leave out of country or out of the state for a bit, because you're managing those assets and you throw in investors on top of that. Like, I don't want to have to report to investors.
Mm-mm.
Like, to me, I probably wouldn't buy a mobile home park again, but I would invest in a syndicator that does mobile home parks
Mhm.
to diversify, right?
Mhm.
And I know how to vet them now because I own my own mobile. I owned a mobile home park, and I've know what not to do and what you need to do to be successful. So
Mhm.
yeah, that's how you ultimately become a lifestyle investor, right? You basically build up enough cash flow so you leave your day job, everything's covered. And at that point, any money that you make is house money, and you just can invest that more passively into syndications that they've been around for 20 years plus. Um, so, I think if you reframe it to like 10 years, I think you can get there. Um, just make it 10 years, but if you say a year, you're gonna be very disappointed. I mean, I almost did it. It's probably doable if you do creative financing.
Mhm.
I think you can do it if you do creative financing. That's probably the only way you can get there that fast. You just have to have the capacity to take it on. But if it's you and your wife and she's into investing as well, I mean, it's doable.
Mhm.
But like you said, it's going to suck for probably those 3 years that you're stabilizing those assets.
Yeah. Yeah.
Just
Because
know that.
even no, trust me, I know. Like,
Yeah.
the two triplexes that we have, they're side by side. That was a pain. Like, and they were right next to each other. One was renovated, and the other one we rehabbed it. And so, yeah, trust me, I
You
know
know.
as far as yeah,
So like it like
that
like so
part.
what happened to me is okay, it sounds cool to say I bought 80 units in 8 months, right? But
Mhm.
I'm taking the beating now, like, oh my God, I'm like more stressed out. I'm burnt out a little bit, just the constant beating that you're taking. And I just look back and say, you know what, I probably could have got to where I'm at today in a more gradual pace, right? Like
Mhm.
the fact that I had shiny object syndrome and deviated to my mobile home park probably costed me like a year
Mhm.
or a year and a half, right? Like I said, I could have threw that into that 50 unit and just sit back on that one and just collect my money and probably be less stressed than I am today. So
Mhm.
it is doable, but yeah, stick to one asset class in one market. And
Excuse
that's probably what I would say. But even despite that, there's things that are going to blindside you every day, right? Like you're going to get
me.
excited. And let's just say you're more comfortable if you have a good reserve. Like, let's just say you're traveling and then you get like a text saying, hey, by the way, the pipe just blew up on the second floor and now all the bottom units are flooded. And that's going to cost you like 50 to 100K to fix, right? If you don't have the money, you're dipping into a line of credit, it's going to ruin your vacation. You're not going to feel like you can travel anymore, right?
Yeah.
Versus if like you have that reserve just sitting there, you're not going to be as worried. So that's what I kind of mean is like, if you're kind of like me and you just don't want to syndicate, at least initially, we have the luxury of just kind of taking our time and doing it very gradually. Because real estate and investing in business is like is a marathon, right? Like it's sustainable to buy 80 units every 8 months. It's not. Is it sustainable to buy a one value add apartment complex and cash out refinance every 3 years? Yes, you can do that while working full time. That's definitely sustainable, right? So now like, okay, I can buy an apartment complex every 3 years and cash out refinance it. And every year apartments start to stack, right? Cash out refinance. So every 10 years, you can basically buy three apartment complexes. And how do you hit your goals? It depends how many units each one's is, right? So you'll be surprised like what you can do. And like, I mean, you're like on day 1 of apartments, right? I'm on year 2. So, I mean, you're just at the start of your 10-year cycle. Like you can take down 3 apartment complexes in these next 10 years fully. I mean, given the track you're on and how action oriented you are, you're like me. Like literally, you can get 1 apartment complex for every 3 years for the next 10-year segment of your life, and I guarantee you, by the end, you might be sitting pretty comfortable, like to the point where you may not have to work. But yeah, it sucks. It sucks to think 10 years out. I agree too. I mean, it's a third of my life, so it's hard. But if you can do that and just think of it that way, like you'll have so much wealth, that generational wealth, generational wealth that you won't know what to do with. And that's a luxury that we have, I'd say. So, so the fact that you have money puts you way ahead of everyone else. Like the fact that you have access to 300K in lines of credits, you're way above the game. Most people do not have that access, and they syndicate, and they own a small piece of the pie, and they're at the mercy of everybody else. I see them. I'm like, I wouldn't want to be in your position.
Not at all.
You have no track record, right? Like, I really have no track record. Like for me and you, trust me, like if we bird a couple properties and we want to partner and syndicate, oh, easy. Dude, we can raise so many. 2 markets there. I'm Oklahoma, you're Atlanta. You don't think we can raise money and take down like 100 unit plus? If you have a property manager there and vet, I have property manager I know and vet in my market, that's easy. So that's why I said that first 10 years, just focus on getting your properties. In the next 10 years, you can become a syndicator and scale big time, right?
Yeah, that's good advice.
Yeah, that's what Brandon Turner did. Yeah, he did the podcast.
Yeah, he's like 8,000 units or some crazy number, if not more.
He's just a money raiser. He just raises money, posts on social media, and then he just partners with operators. That's all he does. That's his skill set, right? And then he's keen to sell it and make $1 billion. But like honestly, like me and you don't need $1 billion to travel, right? Like honestly, if I have $1 million sitting in my bank, a paid off house, and 10 to 20K a month in passive income from my apartments, I never need no one would worry about money ever again. Imagine that situation, right?
Yeah.
You will never need to worry about money again, and just travel. And like what to get there? That's probably, for me, 50 units can get me probably about 10K, 10 to 15K. At that point, it's just paying off my house, right? Fortunately, in California, houses are 1.5 million. I can just start, doing value add real estate. Instead of keeping it, I can just sell it, take that profit, pay down my single family home, to minimize my expense. So that's the true way that's why my spiritual journey the past couple of months, what I realized dealing with all the stress, I'm just like, that's how you truly get free, is build enough passive income to replace your day job, and then once you have that income, focus on reducing your expense to as little as possible. And your base expense is going to be your house.
Yeah.
You can reduce that, you're done. Right? Or you can rent a place if you want to be cheaper. Just rent a place that's cheaper than owning. You know, like here I can rent an apartment for like $2,000, whatever. You know, you don't necessarily need a house too, but you know, I'm just saying if you want to own a house to live in, just pay that off and you're done. And you pull heal up in it for emergencies, boom, you're set. Yeah. Sorry, that was a huge rant there, but I literally been going through it for the past like 3 months because I've been like stressed from like.
No, just you, and like you said, you're rehabbing.
Yeah.
You know, all of them at the same time, so it's definitely a lot.
Yeah.
In addition to your full-time job.
Yeah. Like, and you know, I'm trying to build a social media brand and all that stuff too. So like, I wouldn't wish what I did upon any. I tell like all my students, don't go as fast as me, like unless you have a team, and unless like you said, you need like a third party, you know, myself or somebody to like say, hey, this is the big picture. I'm not attached to it, and I need to hear it myself too. Like, even though I own it, I'm like, I need someone to tell me, like, dude, like, why are you going so fast? Like, what's the rush? You're acting as if like someone pointed a gun to your head and said, hey, you got to get 100 units or else you're dead. And that's how I was running, right? I was like sprinting, and I was like, yeah, you don't need to go this far. You know, I still could have gone this far, like as you mentioned, if I just stayed in multifamily. And but you know, shiny object syndrome, fortunately, like I tried it and you know, just learned. Cost me 1.5 years of my life, but now I have clarity for what to do for the rest of my life. You know,
did you are you out of contract? Well, you've been out of contract with that buyer. Are you has that?
Oh no, we're so I was able to get some more money, EMD, and then we're back.
Okay.
So yeah, the buyer.
So it might happen. I mean, since you did put, you know, maybe he might be able to raise enough to get it closed out.
The guy was just terrible at communication, but basically he was waiting for the securities attorney to approve everything.
Okay.
When you raise money, you have to get the, you know, security, SEC to sign off on it, and he just didn't communicate that. I just like, dude, just let me know what the issue is. Like that, that's it, right? Like, don't just ghost on the day of. So, you know, I think we're back under contract, and you know, optimistic that it will close. But if not, hey, I get a $40,000 EMD, right? Hey, $40,000 to deal with this annoying buyer, right? So he paying the SEC attorney cost $20K. Just those documents alone is $20K. So he's in that deal $60K. So if he fails, that's $60K out of the pocket. I don't think he wants to lose $60K.
That better light a fire under his butt.
Yeah, man. That's what I mean. This is the stress of doing with syndicator. When you syndicate, people back out last minute.
Yeah.
You know, you had a guy that had half the money and he backs out, you're screwed. So like, if you're a lifestyle investor like me, I don't want to deal with that. And I think I just be more stressed out trying to like lose. Like, let's say my dad gave me some money to invest and I lost his money. I'd feel terrible about myself. Now you get to see him every Thanksgiving and Christmas, right? So that's just kind of the clarity I had. So like, I think, and I get it, like the way we're geared, we're just thinking 10 steps ahead. Like, it's not going to make you any happier if you think too far ahead. It actually kind of make me a little unhappy. Like, believe me, when I hit 90 units, I wasn't even happier. I'm just like, oh, well, like I was still making offers. Like I made an offer on a 50 unit in another RV park, despite owning all that. I would have had 4 value add deals. All right.
Yeah, you would have lost all your hair.
I would have lost all my hair. But actually, to be honest, at the time of those 4, I was thinking of getting a contract and wholesaling them.
Okay. Yeah.
So I was thinking more like that quick money, you know. But if I would have gotten it, I'd probably be bankrupt or have no hair or have to sell that one at a loss real fast. So yeah, it's like I said, it's not worth it. Like, just go methodical. And like I said, whatever money you have for reserves will always be wiped out. I had 200K reserves extra. I wiped that out already. I'm already dipping into lines of credits.
Yeah, and that's another thing too. Like you said, your mindset is different now. But some of these deals, because for the past 1.5 years, in addition to my job, I was selling a lot of these deals to the hedge funds. Hedge funds were buying. It's a lot
Yeah.
of single family. So I built a lot of reserves from that because they were paying, 30, 40K above asking, and you just wholesale it. So I made some good money from that. And so I have a good background in wholesaling. So that's that's another strategy I'm going to implement if I can't take the deals down myself, just to go ahead and build.
Dude, when you wholesale multifamily, oh, it's more than just 30K. You can get a lot more. That's
Hmm.
what I'm saying. That's what's beautiful about what we're doing. Like, if we can't take down the deal ourselves, just
Yeah,
wholesale. Just
yeah.
wholesale the deal, get 50, 100K, build up your reserves. Now you take on bigger deals yourself, right?
Hmm.
Just think about 300K, but if you just buy this deal, that's already 300K wiped out between the
Yeah,
down payment and the renovation costs.
that's
And I
it.
guarantee
Hmm.
you, your renovation costs will be more than 150 when you start
Hmm.
ripping
Yeah,
out, ripping stuff out. So like, you technically have, that's all your money for one deal already. So my question would be like, yeah, you don't have enough capital unless you start to raise money to get those other deals. You're just taking down one
hmm.
deal yourself, right? So
Hmm.
it's it's
That's
it's
tough.
really,
And you got to get more money. I got to
yeah.
generate. So
So you gotta like,
on my own. Not raising it in terms of. So I need to go ahead and close more deals and just get my other businesses to generate more income.
exactly. So like,
Yeah,
all you can do is like just focus on building your own income, lower
yeah,
your expense, and then like I said, you give 3-year segments. These things will start to like cash out refinance, cash out refinance, cash out refinance, right? So that's the name. That's what I've been trying to do, because I was the reverse. I just bought 90 units W2. And I
hmm,
realized that, shoot, man, I gotta like focus on like other ways to make money, right? So that's why
hmm,
I started more like businesses and all that stuff. So to have extra streams of income where there's no cap,
yeah,
so that's what I'm trying to do. Like, social media is opening opportunities, right? Like,
hmm,
sponsorships, all this stuff, opportunities that you don't know. Um, so that's what I'm focusing on. That was my limitation as well. Like, I'm not interested in really raising money right now. So it's just the wall I hit as well. So like I said, we can wholesale these multifamilies, make
hmm.
the money. I mean, you already have a relationship with hedge funds, right? Just wholesale them like other deals. You can continue wholesaling single family. Um, as long as you build that money you have to invest in multifamily. Like I said, I can't see anyone really getting away with that initial phase. Like, we're in that initial phase where the first 10 years, it takes a while to build that foundation. About 10 years is
Hmm.
kind of seen it as, um, you know, to
Now
really
let's just,
stabilized, really
if
stable.
you would you still, let's just say, you had the time on your hands, full-time real estate investor, full-time multifamily operator, and you had like 1 million cash. Does that change your outlook on it, or were you still advised to just you know, do each cycle every 3 years?
So I did have 1.2 million in cash, right? That's how I scaled to
Mm-hmm.
80 units. Honestly, what I would do in retrospect is just do, I would probably only do 2 deals
Two.
out of the 3. Um, and I probably would have done, well, it's kind of hard because my apartments are a little bit on the cheaper end,
Yeah, that's the thing. I was like,
right?
and that's why I look. I'm like, okay, what market do I go to? Because Atlanta, $2-3 million, is what you're expecting for a 20 unit.
Yeah.
Um,
Like my
so
20 unit, between my 20 and my 26, that's less than 1 million, right? For
yeah,
just, but
500K. That's just like same thing with California.
yeah.
It's like 2-3 times more, than or less than a single family home. So
But
same
keep
thing
in
over
mind, I'm
here.
pumping in a lot for renovation, right? Like, I'm putting in like
Yeah.
40K into the renovation. But yeah, like in retrospect, I would have just done 2 deals full cycle. That's value add, or maybe
Okay.
buy my 26 unit, maybe that 50 unit that was more turnkey, and then just
Hmm.
have a good amount of money, 400, half a million, just set aside just for a rainy day, because I just don't want to stress about it. Because I
Hmm.
will tell you, your mindset's different with real estate when you have half a million in your account versus when you have like 10,000 and you're using lines of credits.
Yeah.
Your you cannot think as clearly, because when your emotions go up, the stress goes up, your intelligence goes down. Like
Good.
even me, dude, I teach people, but my mistakes, like I'm even making mistakes. I need to hear it myself. Like I need to like have me talk to me. That's not emotionally attached. So I just say it's like you want to invest in a strength, a power position is what I call it.
Yeah.
I feel like right now I lost my power position a little bit. Once my mobile park is sold, I feel like I'll be back in a power position. But because I lost my power position, that's how I knew, how valuable it was to have it in terms of your mindset. Because think about it, I had a lot of money, right? Because every month you're just writing checks. Eventually it dwindles down.
Yeah.
For the most time, when I had a lot of money in my bank account, oh yeah, I'll buy this, invest in this, right? Just
You're not worried, yeah.
not worried, right? But now I look back, I'm like, God, why did I invest in that? I was so stupid. Why did I do that? I'm so stupid. Why did I buy that? I'm so stupid, right? So like I lost that power position, and when you're stressed, you lose that creativity in making deals work. So that's what I would say retrospectively is like, don't put yourself at a level where you're going to be too stressed and you're losing that creativity, because you're not going to like real estate. Like right now, I do not enjoy real estate. If you ask me, I do not enjoy real estate at all. I'm like, nope.
No, that's fair. That is fair.
Right. So you want to keep it in a game where it's going to be stressful, yes, but a manageable level of stress that you can handle, and financially you can take any hit. Right. Like if you have $500,000 and each of my deals went over by 150K in renovation, I still got 200K sitting in my bank. I'm not worried. Right. So that's kind of been my experience, and that's how I'm probably going to pivot moving forward, right? So if I get all my money back, like honestly, I'm going to set aside a lot of money for my expenses. First I do the whole life insurance, max funding, money aside for that, put money aside for my reserve for my 26 unit and my 20 unit, right? Because I'm still renovating my 26 unit, right? Still going through that. My 20 unit needs a reserve once I'm done. I mean, for the most part, that's mostly renovated. And then after that, I don't really have much money left over for me until my 26 unit finishes. Then once that finishes, I can catch a refinance, and then I can buy again. So it's kind of the mindset I'm having, because like I have too many expenses, right? Like if you're max funding life insurance, even though you're investing back in yourself, like I can't leave my W-2 if I have like $10,000 worth of obligations between rent and investing life insurance, right? So I have to max fund it for 7 years. I'm probably on year 3 or 4. So I still got 3 more years. So that means I have to work at least 3 more years. There goes my dream of retiring at 35, right? So, and then most likely, my girlfriend would probably will retire before me, or if we eventually get married, right? Like she's probably I'm gonna retire her first, probably, and I'm still gonna have to work. So it's definitely a grind. But I said, just give yourself 10 years, and that's when you start to compound, right? Like if you look at Warren Buffett, he wasn't a millionaire until he hit his 50s. And then from 60s, 70s, 80s, 90s, he's 90, right? Like that's when he started to compound the most. Like Jeff Bezos started Amazon at like 33, like my age right now. And fast forward to whatever 20, 30 years, he's one of the richest guys in the world. So it just takes time to like build up. So I would just say don't rush it, but obviously take consistent action, but don't like feel bad if like you don't get 100 units in a year. Like like if you get 100 units in a year, you're like already like the 1%. Like I'm the 1% just for what I did by myself. Like this is by myself, right? So don't put that necessary pressure on yourself. I would say just go at a very gradual, good pace that's sustainable long term, and I feel like you will come out of it with a more level head than I guess me. I'm like, in terms of the stress. So because I think to me it's like not worth it to compromise your health a little bit. And like I'm like no fun to be around right now. Like I'll be honest, like you're kind of like just head down, grinding, don't really do much. I guess I'm the type where I don't feel like I deserve to have fun. unless I'm like feeling financially strong.
Mm-hmm.
And then I'm the definition of asset rich, cash poor. So,
Yeah.
you know, you don't want to be, you want to have enough cash to like not worry about it. And at that point, it's like house money, right?
Mm-hmm.
Like after your 10-year segment, it's like playing Monopoly at that point. It's like, oh, well, I can buy this thing and I can lose $1 million and whatever. It doesn't affect my lifestyle if I lost $1 million. Right now, me and you lost $1 million. Oh, I think that wouldn't be a fun conversation to have, right?
Not at all.
So yeah, that's just kind of the mindset I hit, you know, recently. But yeah, if you asked me 2 years ago, I felt invincible. I literally felt like
Mm-hmm.
nothing could take me down.
Mm-hmm.
2 years ago, I thought that I'd have way more cash flow than I had today.
Mm-hmm.
You know, if you were to ask me, I thought I'd rate hit 20K a month by now. If you asked me 2
Mm-hmm.
years ago, you know,
Yeah, that makes sense. Yeah.
but reality slapped me in the face. Nope,
Yeah, I mean, and then after that, back then rates were,
we're good.
in the threes,
Yeah.
like very low.
So
Yeah.
that's how humbling it is, right? Like you asked me
Mm-hmm.
2 years ago, Steven, 2 years ago. If you told me 2 years you're gonna own 90 units, I'm like, bro, I'm retired. Don't have to work anymore. Fast forward 2 years, I'm like, God damn, I'm like so stressed trying to get back to like what I was, right?
Yeah.
So it's not as glamorous as you think and not as fast as you think. But if you give it time, you'll be very surprised as to what it does. So what I'm trying to do is get you to lower your expectations a little bit,
Mm-hmm.
but still buy real estate, right? Like buy good
Yeah.
value added real estate over time. Can't lose. Recession proof anytime. Same advice in a year. So,
Mm-hmm.
but yeah, any other questions you had? Sorry, I went a little bit long today. But
No, you're fine. Oh, there's another thing too. As far as I guess calculation's sake, is there a way that you can calculate an offer price based off of like your D your DCSR? Like, are you able to, like 1.25 divided by whatever to get your offer price? Is there a way to
yeah,
formulate that?
so yeah, sorry, it's gonna be mental math. I mean, I could probably which is a good idea. I can work on an Excel sheet for that and offer it for my course. That's actually a good idea.
Okay.
But
Yeah.
basically, like so your rent, right? So if the rent
Mm-hmm.
is $1,000 and the debt service coverage ratio is 1.25, then basically you can kind of calculate backwards what your monthly loan payment is.
Mm-hmm.
Once you know your monthly loan payment, you can back calculate what your loan is going to be depending on your interest rate and amortization.
Yeah.
Right. And then from there, once you know your loan amount, assuming 75% loan to value, then you know your offer price.
Mm-hmm. That's one of the things I was thinking of doing. I'm terrible at spreadsheets for now.
No, that's actually a good
I
idea.
usually just
I'll work on
hire
that.
it out. Yeah.
No, I'll work on
Um,
that. Because that's a good idea. I kind of did it backwards, but I'll see if I can modify that current one to see if it lets you go backwards.
hmm
Um, yeah, that's a good
Oh,
idea. I'll see if I
and
can make
then
it.
what was another thing too? Oh, have you? I know there's inherent risk in buying LLCs because there could be any liens, but have you looked at that? To like save on property taxes, buying an existing LLC, like the whole purchase price to obtain the multifamily that way. Have you looked into that?
Um,
Or
no, I haven't really seen LLCs as like a tax savings for me. It's just more like
hmm
asset protection. Like in California, for every LLC that I own, I have to pay $800 a year. And I
hmm
went a little bit too happy with LLCs, I'll be honest. So I'm
Well,
actually
to purchase the property, you know how like you can sell, let's just say 1250 Main Street, you're
uh,
buying the LLC of the property to purchase the property. Let's just say they're selling LLCs for $1 million. So that way you can still get the lower property taxes and maybe you're not having a higher
I see what you mean.
yeah. Have you
Assessed
looked into
price.
that at all? Because I know people have done that for like single families and stuff. Like if there's like a portfolio, and they own a bunch of properties, just buy the LLC instead of.
It only works if like that that LLC just owns one property, right? Because if that LLC owns multiple properties from that owner,
Correct.
it's
Yeah.
I mean, I haven't really looked into that. Like, honestly, Texas price for me hasn't been that terrible. Like when I bought my properties, I mean, I bought them at a good price, to be honest.
Mm-hmm.
So it didn't really affect me. Yeah, I haven't really looked into that, to be honest. Like, well, the easiest way if you buy creative finance, you don't technically.
You don't have to. Yeah.
Yeah, that's probably the
I
cleaner
think
way to
that's the
do it.
easiest way.
Honestly,
Mm-hmm.
you just buy creative finance, and you don't have to worry about no banks and no tax reassessments and all that. So honestly, I'd probably lean towards that. But I think the LLC gets too complicated because wasn't there's like liens against the LLC that you don't know about,
Mm-hmm.
so
Liens, debts, I
honest
mean,
lawsuits
anything like
about
that.
it. Like I'd rather just start clean with my own
Yeah.
LLC, and just pitch creative finance instead. So
Mm-hmm.
so yeah, just I don't know how Atlanta or Georgia is, but California is not too LLC friendly. So
Oh, okay. And I know you had touched on CoStar, like as a data source. Is that if they're the ones that like do the appraisals and stuff like that, right? Like, are you able to get like data from them in regards to multifamily that's closed or comps in that area?
yeah, I actually haven't used CoStar. I only
Oh,
use
okay.
PropStream and most recently Property Radar. So actually working in a partnership with Property Radar, funny thing. But um, you, I haven't used CoStar. CoStar is just way too expensive. And
Okay.
honestly, like they just give you like, cap rates. But like I said, you do one or two appraisals, you kind of know what it is. And you
Mm-hmm.
can get a ballpark what the cap rate is, right? Like honestly, I'm not really looking at cap rates when I analyze deals. I'm more looking at like, cash on cash return. And also like, okay, I'm buying it for 30K per unit, but it's worth 60K per unit. That's my margin.
Mm-hmm.
That's the two ways I kind of look at real estate.
Okay.
So I think for me, cap rate's not really pertinent. It's only pertinent for me when I do my cash out refi
Got it. Mm-hmm. But
because
on the acquisition side, you're not too worried about it.
acquisition, I'm not too really worried about it. I'm just looking at cash on cash, and then am I buying it under replacement value or market value? That's
Okay.
really my two methods there.
Got it. Got it. Let's see. I think that's some of the questions I have. Yeah, that's pretty much it. Yeah, just going over everything, and if I have any other questions, I can,
Yeah, man, you
shoot
basically these are supposed to be group sessions, but if it's only you, you basically get private one-on-one.
one on ones. Yeah.
So no, definitely go through the course, write those offers, and maybe next week let's take a look at those offers that you wrote.
Okay.
Yeah,
Okay.
and then whatever
Cool.
questions you have throughout the course, just jot them down, and happy to like discuss and clarify more. But yeah, just get those offers in, submit it, and let's talk about your experience next week about how that went.
Okay.
To so that others can learn as well. But cool, man. Hey, thanks for hopping on and
Absolutely.
great stuff today, man.
All right. Yes. Thank you.
Yeah, have a good one.
You too.